Hello, my YouTube family. Welcome back to Soft Talk FX Academy with Mr. Walls. Trust you're all doing good today. Okay, now I'll be taking you through an institutional candle series. So sit back and relax and follow me while I show you how to, what an institutional candle is, how to identify an institutional candle in the market, and how to trade with an institutional candle. So let's get into it. Okay, now, first and foremost, what is an institutional candle or what is an institutional move? These are, candles in the market or moves in the market that is being used by the market makers to manipulate a particular area in the market, or let me put it another way, it is a move in the market that is being used by the market makers, the big boys as they are called, to pick out the early buyers and the early sellers, as the case may be. So, you know, what makes an institutional candle, unlike what you used to know in all those retail concepts, doesn't have to be maybe a single candle like what's it called, engulfing pattern, engulfing candle, or maybe a doji, or all those names out there. That's not what makes up an institutional candle or an institutional move. But so just follow me closely as I'll be showing you what an institutional candle is, and like I told you, how to identify it in the marketplace. For instance, on my screen I have VIX 75, and the good thing about an institutional candle is it is applicable on all assets, whether stock, whether crypto, currency, synthetic indices, which I trade the most. So let me show you this in the case of a sell, what an institutional candle is. I told you these are moves in the market that is used to manipulate the early sellers or the early buyers in the market. It is used to manipulate a particular area. So right before me is VIX 75. So let me show you an area that got manipulated. Let me show you an area that got manipulated, in this market. So look at this area. Look at this area closely. This is a relative, what's it called? Equal highs. So if you see this place in the market, in the days of all those retail concepts, you want to, when you see a double top, you want to sell. We are told to sell. When you see a double top, you sell. And look at it. Assuming you sold the first time, you would have gotten a piece of the pie. You sold the second time, you would have gotten a piece of the pie, then you were taken out of here. So that's why we used to put the currency sign. I use dollars. That means there is money up here, and what we refer to as liquidity, because when people are selling from here, from this top, people are selling from this top, they are bound to put their stop losses above here. So people's money are lying fallow above here. And we look at what the institution did. They traded up here, then price dropped, and which gave us a nice break of structure right here. This is a nice break of structure to the downward side. A nice break of structure. We have several break of structure in this move. This is an equal low. Money is right there because people are buying from here. Liquidity is lying here. I mean, people's money are below here. So they took out all those places, and they traded down, they left an institutional candle above. So that's why I said the move that took out liquidity. This is how I like to do it. The move that took out liquidity. It doesn't have to be a single candle. It doesn't have to be a single candle. Like, we have types of institutional candle. This is the one I like to trade the most. I like to trade the one that, the move that took out a particular liquidity in an area before a break of structure. And how do you identify a valid institutional candle? Because when you look at the market, you see a whole lot of maybe the last up candle before before the down move, the last down candle before the up move. how do you identify valid institutional candle in the market? When you have it take out liquidity, what I want to see next is a break of structure. That's how I identify a valid institutional candle in this market. Immediately I see that it has taken out liquidity, what the next thing I'm looking out to see is uh a break of structure in the direction, in my bias direction. And one another way to also identify a valid institutional candle is you must consider the market flow. If you don't know anything about market order flow before now, just check our videos we have up here. We have a particular video where we dealt very well on that. You must consider the market flow because we are told to trade in the direction of the market. You don't trade against the trend. If you look at VIX 75, even on 4 hours time frame, which I have now, you can see that price has been going down on 4 hours time frame. So, and how do you identify a trend? Oh, I'm actually digressing, but let me quickly check this. And how do you identify a trend? You see price breaking in a particular direction and respecting the institutional, candle above. Like, let me show you another move here. Let me show you this. Look at how price took out those people that sorry, sorry about that. Those people that got into selling early. Look at how they got look at how this move eventually took them out. So after taking them out, you see, this move took them out. The move that took them out. Price eventually traded back into this area. It traded back into this area. Then before you see the drop. So the people that were selling early, that got into the sell early, they got taken out. The move that took out institution, that manipulated an area, because it's a form of manipulation. People are selling, then the move came and took out their stop losses. And those that are the breakout buyers as well, that they are like, if this area gets broken, they are going to buy. Their buy stops and their orders are above here. So it ignited their orders, then price dropped immediately. And this happens on all time frames. It happens on the daily time frame, it happens on the 4 hours time frame, even it happens on 1 minute time frame, 15 minutes time frame. That's why there's a saying that goes that price price is fractal. It's fractal in nature. What is happening on the weekly time frame will eventually happen on the 1 minute time frame, on the 15 seconds time frame. So time, what's it called? Price is fractal. It's fractal in nature because the same thing happens in all time frames. So we have identified a valid institutional candle here. It took out liquidity. It manipulated this area because, okay, you want to sell, you've already sold. It gave you a piece of the pie, and you see this big move. I know that it has happened to a lot of people a lot. You are selling, all of a sudden you saw that big move, it took you out, then price eventually went your direction, and you are thinking, haven't you done the right thing? Your mentor told you to sell, but this move took you out before the sell. This is what is happening, a manipulation of that area. And it happens, just notice it, you see all these kind of moves where you are planning to sell. That's where the manipulation takes place. Where you are planning to sell, your mentor has told you to sell, the move came, took you out, then went that direction. You think maybe somebody from somewhere is actually monitoring what you're trying to do. But no, it's not that. You just have to understand this market, how this market is designed. You just have to understand this market. So, and how do we trade an institutional candle? Uh, we don't trade the impulsive move. Depending on your expertise on how to trade it. I personally, if I want to trade, I catch this impulsive move to the downside. But if you're not catching this impulsive move, because immediately I know that we are on a downward trend and we have a good manipulation right there, then I will jump into my trade, take my trade down here. But Assuming you miss this first move, you miss this first move, you miss this first move to the downside, price will always come back into the trade back into an institutional candle area. And that is what we are seeing on VIX 75. Price traded back into an institutional candle area before it will now eventually go down to the direction that it's going. And why is it that price will always trade back into an institutional candle area? You know, what the big banks do is what the big boys do. I mean the market maker. What they do is before they sell, assuming they want to sell this market. You know, the market is supposed to sell, like the retail traders has gotten in early. But what they do is they will buy first in order to sell. If they want to buy as well, they will sell first in order to buy. So that is what has happened there. Just imagine they bought with let's say standard lot size here, and they sold with three standard lot size. In essence, what does that mean? It means that they are in drawdown. They are in drawdown on the one standard lot size they bought with, but in their sale they are in profit. So they have to come back and close the buy because they are in drawdown. As the price is going down, they are in profit on the sell, but they are in drawdown on the sell. So they will always come back to close the buy, the position they open to manipulate the retail traders out. They will always return back there to close the order, which is called a mitigation. So this area is a mitigation point. When they return there, they return to mitigate the loss, the drawdown they have here. And that is what has happened. So if you see us dropping the buy orders, the sell orders, that is what we are seeing. We have seen an area of institutional candle in the market with price will return to mitigate. And that's why, we just wait. When you trade an institutional concept, you're like a sniper. You wait for price to return into a mitigation point, and that's where you want to take your trade. And that's how we catch all those snipers. You wait for price to come, then you take your trade to the downside. So I've actually given a trade on VIX 75 at the moment. Price, you see, price is already going down, and when price is going down, we look for liquidity area to target because price will always move towards the money where people have their stop losses. If you look at what is happening here closely, you see that we have relative equal lows. We have equal lows right here, equal lows. And what in the days of all those retail trading, what are we told to do? When you see a double bottom, that means this is a very strong support. This is a very strong support. And just imagine you bought it the first time, you bought it the second time, they are giving you a piece of the pie. And now price is returning back there. And what are you thinking of as a retail trader? You want to buy again because this is a very strong area in the market that has been, bouncing price to the upside. So then, as people are buying from here, their stop losses are below here. So there is liquidity below here. So if I'm taking this trade, I'm going to be since I'm selling, I'll be attacking the liquidity below because I'm selling. Assuming I'm in a buy, I'll be looking for area of liquidity above. If you don't know what the liquidity is, check our videos. We have a detailed video on liquidity on how to approach them. So this is an area of liquidity. So if you come to our Telegram channel and you hear me talking about liquidity, types of liquidity, I'm trading towards the money. I'm talking about trading towards an area of liquidity. So price is coming here. There is high probability that price will come down there because there is money there. They will always move towards the money. Liquidity is the fuel of this market. It will always drive this market per time. It will always drive this market per time. So let me quickly show you another institutional candle area in this market. Let me quickly show you another one in this market. Okay, so now look at what we have here. Look at what we have here. I told you it's a manipulation of a particular. That's why we don't buy at double bottom. We don't sell at double top because we know that areas will get manipulated. Look at it, equal lows. Look at these equal lows in the market. And if you've been taking your buys, you get a piece of the pie. price return back there. You are thinking of buying here. Maybe your mentor has even told you to buy, you bought. All of a sudden, they traded below because there is money below here. There is tons, money below here, money below here, because people have been buying from here. Their stop losses are below. So they traded back below. And what did they say? They took the price up. They took the price up, took the price up. We have break of structure to the upside. The price has been coming down. We have several break of structures to the upside. And I told you a move that took out liquidity. And if you are scaling down to a much lower time frame, you can as well be refining your stop loss to have a smaller stop loss. Actually, the essence of this video is just to identify institutional candles, not to show how to refine stop losses. I'm going to be dropping another video on how to refine stop losses. So if you are coming across this video, this channel for the first time, do well to to click the follow button, turn on the notification bell, like our video, so that when we drop educational content like this, you'll be the first to know. You'll be the first to know, you'll be the first to watch it subsequently. So you see what happened? They took out the liquidity below here and they traded back into this area. Guys, is this not interesting? They traded back into this area. Look at how they tapped it. Bam. They tapped it and they took the market to the original place they intend taking it to. They took the market up immediately. So they just traded back, they tapped into this area, and look at it, boom, to the upside. So that's just it. If you have any question concerning institutional concept, how to identify institutional candles in the market, if you want to talk to me directly, come to our Telegram channel, check the description box. You see the link to our Telegram channel where we drop free trades, free analysis, using institutional concept. Come to our Telegram channel. You can send me a direct message on Telegram. I'll attend to it as soon as I receive your message. So, like I said, it's going to be a series. So I'll be dropping more videos on institutional candles, how to identify it in the market, and how to trade it. See you some other time, guys.